Saving more money for retirement and investing more money are two of Americans' top financial goals for 2025, according to a recent Bankrate survey. So, we want to review some portfolio housekeeping tasks from Fidelity that everyone can do as we kick off 2025. Here is the checklist. Review your 2024 portfolio maintenance, make a financial plan, evaluate your asset mix, and consider sector and stock-specific exposure. Here to discuss, we've got Heather Knight, who is the Fidelity Investments Vice President and National Brokerage Coach. Heather, great to have you here with us. Let's jump into the first thing on the checklist. How do you use your 2024 portfolio performance to enhance those 2025 decisions?
Yeah, thanks for having me today. And first thing I would say really is the one thing that you want to do is to compare your end of year portfolio performance to a benchmark or an index that might be relative to your portfolio. So that's going to give you that starting point, and then check for underperformers. Look at the underperformers in that portfolio. Ask yourself, has something changed with these positions since you bought them? Would I be willing to buy those positions today? And then, of course, I usually like to tell folks at the end of the year is a great time to compare those positions. For example, you might find a lower cost ETF or a better performing stock or an undervalued in the same industry or sector. So I would check my positions on Fidelity.com each quarter, particularly for myself, but at least try to do that at least once a year. And remember this too, that ETFs, there's a new one that comes out every day. There's a lot of mutual funds out there. So make sure those objectives align with your goals and expectations.
Yeah, that's a great point. Number two on your checklist as well here. Talk about the importance of a financial roadmap.
Yeah, so having a financial roadmap is really important. And over the last few years, I've worked with a lot more clients that tend to be DIYers, those folks that tend to prefer to manage their investments on their own. And that's due to the better technology, financial literacy, and of course, some other competitive market dynamics. So whether you make your own investment decisions or work with an advisor, I'd say start with the end in mind. Your goal is going to help you draw out that financial roadmap and determine what you're going to be investing for. And that's going to help you get that timeline to something that you're working towards, essentially.
Number three, and this is all about looking at your asset mix, really what's making up the total pie here. So what percent of your portfolio is stocks, is bonds, is cash? And we know this tends to vary based upon what generation you're in.
Yeah. Absolutely. I mean, you have to look at diversification in a couple different areas. And I think it comes down to that time horizon. So thinking back to your goal, making sure that you have a proper asset mix is really important for diversification. So are you investing in stocks, bonds, cash, alternatives? How diversified is that bond portfolio and stock portfolio? And making sure that you're not concentrated in some of those areas. So that asset allocation should really reflect you and your goals. For example, if you're a long-term investor and you have that higher risk tolerance, you might have more exposure to stocks than maybe some other assets. Fidelity.com has some sample portfolios that you can reference as well. Other considerations when looking at diversification should include your time horizon, risk tolerance, and your financial needs, of course. And finally, I would say this, even when you're thinking about doing things on your own, like myself, I tend to be a little bit more DIY. I think it's really important to get a second set of eyes. So you might find that you might be overlooking a critical piece of your portfolio, and then you can partner with an advisor. We no longer live in a world where it's all or nothing, meaning just because you work with an advisor, it doesn't mean that you're committing to a full management of your portfolio. And then, of course, rebalance is needed.
Number four here on the list, and I got to hustle to my finish here, but specific sector exposure, how do you evaluate that?
Yeah, for me, I actually take a look at, I tend to take on more of a core satellite approach. But overall, when you're looking at different sectors, I think it's really important to focus on the research that's behind it. Think about what's currently happening right now, the business cycle analysis, economic trends, and determine what sectors or themes might make sense to be a part of that portfolio overall. That's what I typically will do for my satellite positions.
And just lastly, while we have you here, stock picking, how do you analyze specific holdings?
Yeah, absolutely. You have to do some research. Determine if those investments or what the thesis is for holding those and if it's still strong. I tell folks before buying a stock, you should answer these questions. Why am I buying the stock? How much am I willing to gain? How much am I willing to lose? And what's my time frame? That helps us to establish a baseline and can help us remove some of that emotion that we tend to get with stocks. The bottom line is have a strategy in place before you buy the stock.
Heather, we got 15 seconds here. Give us your top tip for people evaluating their portfolio.
I would say overall, focus on your time horizon, your goals, make sure that you feel comfortable with them, and absolutely reach out and get some help if you need to. There's plenty of people out there that will be a partner in crime when it comes down to your portfolio.
Heather Knight, thanks so much for taking the time.
Thanks for having me. Take care.